Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions.
Hey there, investors. Hope you're having a great day so far. Let's dive right into today's morning download. So yesterday turned out to be a pretty good day for the market, but there's something on everyone's minds right now: the situation in Israel. It's not looking great, and there are concerns about how it will impact various industries. Now, here's a little fun fact for you. Have you ever heard about day traders? They're a unique breed in the investing world. Interestingly, they make up a really small percentage of investors overall. Surprisingly, a whopping 80% of them quit within just the first 2 years. And wait for it, a staggering 95% of them actually end up losing money. It just goes to show that day trading is not as easy as it may seem. It requires a lot of skill, knowledge, and experience to be successful in that game. So, before you jump headfirst into day trading, it's essential to be aware of the risks involved. So, some interesting news on the economy front. The International Monetary Fund, also known as the IMF, has updated its growth forecasts for various countries, and it looks like the United States is doing pretty well. The IMF now expects the U.S. economy to grow at a rate of 2.1% in 2023. That's a bump up of 0.3 percentage points from their previous projection. But not everyone in Europe is sharing the same optimism. The IMF actually lowered its growth forecast for the Eurozone by 0.2 percentage points, bringing it down to 0.7%. It seems that economies like the UK and Germany are facing some challenges, which is affecting the overall outlook for the region. However, some countries are still expected to outperform the US in terms of growth. In fact, the global growth forecast for this year is at 3%, and India is expected to be one of the strongest performers with a growth rate of 6.3%. On the other hand, China's growth forecast has been downgraded. Now let's take a look at some interesting tidbits from around the world. The Pakistani rupee has been performing well against the US dollar, outpacing other Asian currencies. Over in Europe, a member of the European Central Bank has warned that there may still be potential for more interest rate hikes. And in Singapore, their digital economy has almost doubled in size over the past 5 years. Impressive. Generative AI has been receiving a lot of attention lately, with big companies already reaping the benefits. However, according to a recent report by CCS Insight, this industry is predicted to face challenges in 2024. This view is not new, as many experts, including Gartner, have previously expressed similar concerns. So why is generative AI being deemed overhyped? Well, the report attributes it to the cost, risk, and complexity involved in implementing this technology. The immense hype surrounding generative AI in 2023 has created high expectations, but there are still numerous obstacles to overcome before it can truly make an impact in the market. As companies increasingly opt to develop their own chips instead of relying on external vendors like NVIDIA, costs are being pushed up. While this move may prove advantageous in the long run, it could negatively affect stock performance in the coming year. The potential impact of this trend extends to both large and small firms heavily invested in generative AI, such as Meta, Amazon, Google, and Qualcomm. These companies may face challenges if the report's predictions hold true. However, this doesn't necessarily mean that one should stay away from AI altogether. There are experts who remain optimistic about AI-related stocks like Supermicro, NVIDIA, and Broadcom. In fact, AI has the potential to become a massive $15.7 trillion global economic enhancer by 2030. In other news related to AI, Microsoft has recently announced new tools aimed at assisting doctors in delivering better care, while AMD has acquired Nod.ai to compete with NVIDIA. On a different note, Samsung's upcoming financial report is expected to reveal a significant drop in profits, which is something to watch out for. So, we've got some interesting news in the world of finance and technology. Fintech, which is the combination of finance and technology, is becoming a pretty big deal. And if you're an investor, you might want to pay attention to the top players in this industry. CNBC recently teamed up with Statista to identify the biggest fintech companies out there. They looked at a whopping 1,500 names across different market segments and analyzed factors like user numbers, funding raised, and revenue. Now, you might be wondering, what does all of this have to do with crypto? Well, here's the thing. Many of these fintech companies have been getting into the crypto game. They're adding crypto rails and expanding their offerings in the world of digital currencies. So, if you're interested in investing in crypto and want some ideas, you should definitely check out the list of 200 companies they've put together. Who knows? You might find some good opportunities there. And here's an interesting tidbit. Out of the top 10 companies, 5 are based in the US. So it seems like the US is definitely making its mark in the fintech world. IPOs, or initial public offerings, can be a great way to benefit and improve your financial situation. Just look at the success stories of companies like Airbnb and CureVac BV, which offered incredible returns to investors. Airbnb saw a 114.7% increase above the IPO price, while CureVac BV offered a whopping 596% return from the offer price. These kinds of listing gains can mean quick money for investors. One of the advantages of investing in an IPO is that prices are usually low at that stage, making it easier to get in. Additionally, companies provide a lot of information during the IPO stage, making the decision-making process clearer. However, not all IPOs are successful. Companies like Robinhood, Uber, Etsy, and Omeros have faced challenges despite their initial hype. That's why it's important to choose the right IPO to invest in. Don't just blindly follow big names. Understand the business model and evaluate the company's long-term prospects. Look for companies that have proven themselves and have strong supporters and brokers. It's also essential to focus on a company's growth potential rather than solely looking at its past performance. Price is another important factor to consider because not all IPOs are justified, and some companies start off with high valuations. Despite your careful considerations, investing in IPOs can still come with challenges, as the stock market is unpredictable. So be cautious throughout the process. If you're ready to jump into an IPO, here are a few upcoming ones to consider. Birkenstock, holding on NYSE with an expected starting price of $44 to $49. Biolingus on NASDAQ with a price range of $15 to $16 per share, date not announced. And Healthy Green Group holding on NYSE with a price range of $6 to $7 per share, date not announced. Happy investing! Have you heard this personal finance quote of the day? It's quite intriguing and comes from none other than Warren Buffett. He said, "I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful." You know, it's a pretty powerful statement if you think about it. Buffett is basically suggesting that to achieve financial success, we need to be mindful of our surroundings. When everyone around us is being overly optimistic and greedy, we should be cautious and even fearful. It's about resisting the temptations of jumping on every bandwagon and instead taking a step back to analyze the situation. On the flip side, when others are panicking and selling their investments out of fear, that's when we can swoop in and be a little greedy. By having the courage to invest when others are retreating, we have the opportunity to take advantage of potentially undervalued assets. Buffett's quote is more than just a catchy saying. It's a wise reminder to stay level-headed and make rational decisions in the world of personal finance. So, let's remember to close those doors, be mindful of market sentiment, and always seek out opportunities that present themselves in the face of fear.
In today's episode, we discussed the market's performance and the concerns arising from the situation in Israel, the IMF's updated forecast for global growth, the obstacles facing generative AI and its impact on big companies, the top fintech companies according to CNBC and Statista, the factors to consider when investing in IPOs, and Warren Buffett's valuable advice on seizing opportunities. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.